It's December 20th. JLD here, and welcome to MSTR Today in the Treasury Titans. Michael Saylor is ready to build. He's exciting about what he's building. He has seen the light. I mean, look at that. The light bulb has gone on. You can see the glint in his eyes. Nothing in this video is financial advice, but come on. If you have been following the strategy story, if you've been following the Michael Saylor trajectory, how can you not be unbelievably excited about what is to come? Because, man, we have already won it. Now it's just a patience game of the rest of the world catching up, of Bitcoin going on a run, and then the true colors will show through. Because again, Michael Saylor, he says build with a capital Bitcoin B. Let's go. All right. Hugh says, do you think we backed the truck up again this week, MSTR fam? Bitcoin. Let's go. Very exciting stuff. My answer to that question is yes, I think we did. I mean, with a 4% increase on Friday in MSTR shares, with IBIT also going up 4%, that tells me that Michael Saylor very likely was hitting the ATM. I'm going to go ahead and say he hit another Billy. I think he hit another Billy. I think that's kind of his goal through year end is to get a Billy a week. I think he wants to show the rating agencies that he can do this in a crabby, kind of crappy up and down market. I think he just knows something's coming, so he wants to do that for other reasons. I mean, he's having these conversations with all the big banks. 2026, in my opinion, is going to be a banner year. And Strategy Maxi says, greatest business on earth. And this is a post from Strategy itself who said, Strategy is a scalable, tax-efficient, fixed income generator. So what happens? Well, the Bitcoin treasury model purchases Bitcoin, which appreciates tax-deferred, keyword here, tax-deferred, arrow goes down to issuing digital equity and digital credits that is tax-deferred, which I'm buying in the form of Stretch and Stride, and then paying dividends on that credit to people like myself who own it, which is tax deferred for me. That's ROC, return of capital, 10-year deferred. And then what are they going to do again? They're going to purchase Bitcoin, which appreciates tax deferred. Greatest business model on earth. The Bitcoin therapist says Michael Saylor is currently pitching to large U.S. banks to buy his preferred equities. They can turn around and use a product to offer digital dollar accounts for 6 to 8% APY. Banks get customer money. Customers get yield. Strategy gets Bitcoin. All right, a rising tide lifts all boats. Do you think that Strategy knows what they're doing? Do you think that Michael Saylor and Phong Lee know what they're doing? The answer to that question is yes. And Michael Saylor, knowing all this stuff, says keeps getting better. And that is better with a capital Bitcoin B. Let's go. Adam says low MNAV plus high amplification equals asymmetry. You're paying a small premium for a larger Bitcoin exposure, and the market is basically offering you a leveraged Bitcoin position at near spot pricing as long as management doesn't screw up the capital stack. Everyone wants in at 3.4x MNAV. Nobody wants to touch it at 1.1 MNAV. Markets are interesting. I would say very interesting. Chris says, how does it feel to be defending the MSTR thesis when you've spent over 1,000 hours studying it? Well, it feels like you are in the Matrix, stopping all the bullets, because guess what? Chris has spent 1,000 hours studying the Matrix. I have spent 1,000 hours studying the strategy thesis as well. We are bulletproof, period. Chris says, if Bitcoin goes to 10 million, that's 120x from here. Based on my projections, that means MSTR could do anywhere between a 180 to 300x during that time. So a 180 would be $30,000 per share. A 300x is 50,000 per share, bullish. And then Jeff jumped in by saying another crazy stat of Bitcoin equals 10 million. In order for a new entrant to crack in the top 20 Bitcoin Pubco hodlers list, assuming no changes, you would need $51 billion in liquid assets, which is actually right around where Strategy is today, by the way. Only about 12 companies in the world with that much liquid capital today, a reorder of global corporate power. And Zink says, I mean, I was going to say I look forward to riding this journey with you both to 10 million, but then I suspect most of us will have vanished from the internet at that point. Great posts from you both. And by the way, Zinks, maybe you will, but I'm going to keep posting every single day. Chris says, Jim Chanos is extremely fortunate that we have an extended 5-year cycle instead of 4. Otherwise, Bitcoin MSTR would have been on a parabolic run this year, and his short position would have 100% blown up. Bad decisions can lead to good outcomes. And listen, let's give credit where credit is due. Jim Chanos made a call. His call turned out to be correct. Kudos to Jim Chanos. I was a disbeliever. Many people were disbelievers that were obviously Bitcoin and strategy maxi bulls. But at the end of the day, everybody can get lucky. Speaking of lucky, Michael Saylor does not require luck. He does not decide that luck is something that he needs to focus on or have happen to him. He just executes on truth, on pureness, on the most pristine capital in the world. That is Bitcoin. Listen to him talk the talk at Bitcoin Mania. Sit back, relax, and enjoy your weekends.
If you don't trust anybody, you buy Bitcoin, which is a good idea. If you have a short time horizon and you don't like volatility, you buy the credit. And now let's look at how this breaks down in the world. This is the stretch yield. It pays 10.8% effective yield. Private credit only pays 7. Junk bonds pay 6. Money markets pay 4. Municipal bonds pay less. The bank doesn't want to give you much of anything. This is the best it gets in the entire world, US-based credit. The benchmark is SOFR. SOFR is going to fall. When SOFR falls from 400 basis points to 3, mortgage credit, corporate credit, and junk credit is all going to be drawn south by 100 basis points. So digital credit's already 2 to 4 times better. If you're a retail investor or a corporation and you pay taxes, the fact that you can defer the tax, New York tax, city tax, federal tax, means that buying STRC, buying digital credit, is like a bank paying you 22% interest on your bank deposits. You see, it's off the chart. It's 4 times or 5 times better than buying a conventional money market. And in fact, all digital credit is better than all conventional credit. Why? Because the collateral is appreciating and it's digital, and conventional credit is built on depreciating, collapsing collateral, whether it's a data center or a product or a warehouse. And it's all indexed to the risk-free rate, which is repressed by most central bankers. In Japan, it's 50 basis points. All the credit is tied to 50 basis points. And so digital credit is free market rates. And if you're a taxed investor, the tax advantage of digital credit is, again, do you want 1.5% in Europe or do you want 20%?
When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you. From what customers see to what they don't, legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
Our objective is really to build out that entire free market yield curve around the world, right? Why can't you get paid 10% in any currency everywhere? And you can see all these currencies, right? You're getting 0 in Switzerland. So the opportunity for treasury companies, ours and other treasury companies, and the reason we need Bitcoin treasury companies in Switzerland and in Japan and in France and in Great Britain is because we need companies to accumulate pools of capital and issue credit that meets regulatory requirements, that integrates into the banking system, that absorbs the currency risk, that fixes this yield curve, fixes this savings problem. So if you don't know what you want, you probably want treasury credit. I joke, it takes 100 hours for people to understand Bitcoin. So you go and you orange pill someone and you say, here's Bitcoin, and let me tell you about money, and let me tell you why it's not currency, and why it's a store of value, and why the utility doesn't matter, and why we're going to use it. And after 100 hours, you decide it's a volatile asset that's better than the S&P, and if you don't need the money for 4 years, you should buy it. But that's a very, very difficult educational process. This is another educational process. This is a 15-second ad. What it says is, if you like money and you're not getting paid by your bank, you can get paid 10 or 11%, 10% by buying digital credit. Okay? Short and sweet. I don't need to explain Austrian economics to you. Like, you use electricity, and probably not many people know how a nuclear reactor works. You don't care. All you know is you want free electricity. And you use the iPhone, but not 1 in 10,000 electrical engineers understands the way the codecs work and the chips work, in wireless handsets. Doesn't matter. Creating a great consumer product is the way to deliver technology to the world. Digital capital is appreciated by those after 100 hours. It's loved by people after 1,000 hours. But what's the equivalent of the automobile? What is the mass consumer product? Well, here's digital credit, but I'm not going to stop there, because what I'm going to say is this is a journey of discovery. First, I discovered digital capital. Then I discovered long duration digital credit. Then we discovered short duration digital credit like Stretch. And now we realize that we can create digital money. And what is digital money? Well, digital money is when we start to plug the credit into the traditional finance economy. What we think is that digital credit is going to power insurance and pensions and long duration liabilities. But we think digital bills, Stretch is like a digital T-bill, a digital short duration instrument. We think it's going to power money. And let me show you what money looks like. Stretch, and you create if you take digital credit, take Stretch, and you create a fund which is 80% Stretch, 20% currency equivalents, then you've got a digital money fund that could be buffered against instant liquidations. If people want to redeem 20% of the fund, you sell the currencies instantly without actually putting pressure on the underlying digital credit instrument. The blended rate of that, it wouldn't be 10%, it might be 9%. Now, if you want to strip all the volatility off it, the volatility of Stretch might be 5%, it might be 10%. What if I wanted it to be 0%? If you want to strip the volatility, the formula, the recipe for digital money is 80% credit, 20% currency, and a 10% cash reserve. So you actually take $10 million of cash, $20 million of currency equivalents, like a money market, $80 million of stretch. You hold the cash in reserve, and then every day at 4 p.m., you just top up the NAV using the cash reserve. So you trade like a stable coin. You would have $1 NAV. Now, if you do that, you've got zero vol. It's totally backed. You'll probably get about an 8% yield. Your Sharpe ratio, 8% minus 4% divided by infinity. Or sorry, divided by zero. It goes to infinity. The Sharpe ratio goes to infinity because the vol goes to zero. And now think about this for a second. What could I do with digital money? I could create a digital money coin. I can create what looks like a stable coin, a $1 stable coin, stable to 6 significant digits, that pays you 8% yield, tax deferred. Tax deferred 8% yield, 12, 16% tax equivalent yield, but powered by Bitcoin. What's the second best? There is no second best.